I dug deep so you don't have to. Let's talk about the 9 changes that economists and CEOs see next on our horizon.
This is The Rare Advisor, proud to be a part of the Advisor Advancement Network and home of a business model supercharged by recurring and repeatable events. Your host is Mike Walters, CEO of USA Financial. He is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor.
So it's no secret, everyone wants to know, where's this thing going next? We've got all kinds of volatility. The market's going up, the market's going down, the market's going sideways, inflation is going up. We've just got all kinds of things that are attacking the bull market and the economy as we know it. And basically what I've done for you today is I've dug through all of this stuff. I'll talk about it, but I'm going to boil it down for you to the 9 changes that economists and CEOs are expecting next. So if we take a look at the Chief Economist's Outlook, you can go pull this up from May 2022. It's from the World Economic Forum. It's their survey and report, as they title it, the Chief Economist's Outlook. I'm going to boil it down to 5 items out of that report. Number 1, they continue to anticipate higher inflation alongside of lower real wages globally, meaning that even if wages are going up, they're not going up as fast as the inflation is. So the lower real wage effect that's taking place, even though wages might be increasing, inflation is outpacing them. Number 2, food insecurity in developing countries. Now, this I would say is mostly tied or highly influenced anyway by Russia's attack against Ukraine and the fact that a lot of the grain for some of the third world countries comes from that part of the globe, and that grain and some of that other food production is not able to get into transit and distributed as normal. Number 3, backyard business, meaning more localization, more diversification, and politicizing of supply chains. Companies that got caught by the short hair on supply chain are starting to change their attitude about how they pick up product from vendors, and they're starting to take a more local type of an approach. And that goes right along with number 4, de-globalization. Greater rollback of globalization in goods, labor, and technology. So people are starting to stay within their country. Obviously, we're talking primarily about the U.S., but I think you could apply that in many parts of the globe. They're looking to stay more in country rather than getting product and supply and vendor issues, which then gets into supply chain stagnation, bringing that in from a global perspective. And then number 5 out of our Chief Economist's Outlook, number 5 is the sanctions are effective in dampening the economic outlook for Russia. So economic outlook for Russia has nosedived. Doesn't mean they're not still a strong country in many other ways. They still can be very dangerous, obviously, but the sanctions are affecting them, in theory, more than they're affecting the rest of the world. Obviously, energy is a big issue. Now, let's go to the Deloitte Survey, talking to CEOs, and this is from the summer of 2022, and you can Google that up as well. Number 6 comes from there. Growth is becoming stifled. In June of 2021, 77% predicted strong growth for their companies. In June of 2022, only 49%, less than half, predicted strong growth. So a year ago, over 3/4 were saying strong growth. Now, less than half are saying strong growth. Number 7, the external issues that influence or disrupt businesses. January of 2022, so beginning of this year, 36% anticipated financial instability and specifically inflation would be an issue. Only 36%, so let's call it a third. Now, June of 2022, over 82% claim inflation to be a huge issue for them. And then number 8, the CEO's personal outlook over the next 12 months as it relates to their company and the economy in general. 67% are pessimistic regarding global economy. 67%. So 2/3 are pessimistic regarding global economy, but only 5% are pessimistic regarding their own company. So they believe in themselves, they want to bet on themselves, but they think in total that the economy is not looking good. And then finally, number 9 from the Wall Street Journal article titled CEOs Ditch a Kinder, Gentler Approach as Economy Shows Signs of Chilling. Here, I'm going to give you some quotes, something I don't normally do. I'm going to pull it up on my screen so I can do it for you that way. Google says to work with greater urgency, sharper focus, and more hunger than you've shown on sunnier days. This is a statement to their employees. Meta or Facebook said we must operate with greater intensity and expect us to get more done with fewer resources. So again, tightening of the belt. And then the Wall Street Journal writer of this article had an interesting quote that said, many CEOs disliked remote work from the beginning and are tired of hiding it. Advisors and executives are saying that privately, some CEOs have said the prospect of an economic downturn is going to give them greater license to order their employees back into the offices. On earnings calls with investors in recent weeks, executives have also been emphasizing their abilities to hold down costs, dust off tactics that have been used in prior economic downturns that they believe will work now again as necessary. So there you have it, the 9 changes that economists and CEOs are expecting to see next. Pretty good summary. Go pull the documents if you want to dig deeper.
This information is for licensed financial professionals only and is not intended for use in soliciting sales from the public. The views expressed represent the opinions of the presenter or their featured guest, not necessarily those of USA Financial or its affiliated subsidiaries. Industry references are generic and not intended to represent actions or beliefs of any individual or entity. Content is only presented to illustrate general principles, beliefs, or ideas and should not be construed as legal or regulatory advice. Trademark and copyright protected. USA Financial and Affiliates.